What is going on, champions? Welcome to another video of Trading for a Living Forex Champion series. So for today's video, I'll be teaching you guys a Forex scalping strategy using the 50% rule entries. So again, a big shout out to all my VIP students and to all the members of the private group. So if you want to be my student, go check at the description below. And if you are new to this channel, you may want to subscribe and hit that notification bell so you are updated every time I posted a new video. So without further ado, let's get straight to the charts. Alright, but before that, again, I only promote what I know is the best. If you want to trade with the best broker, trade with USGFX. Be smart, be informed, be with USGFX. Alright, so going back to our charts. Alright, so our topic for today is all about scalping strategy using the 50% rule entries. So what are the rules? What is the rule, or basically what is the thought process when it comes to applying this strategy? So I'll be teaching you guys step by step on how we can use this strategy in your own trading. All right, so let's say we are here at the current pair euro CAD. So since I'm doing a scalping, basically we're trading at a much lower time frame, but before that we should mark our zones on a higher time frame to know where we at the current market structure level. All right, so if you try to look this current market, so we know that currently the market is in a consolidation at this point. All right, so I will mark now my key resistance level and key support level of zones. All right, so in terms of market structure, we know that the price previous support got broken, previous support got broken, now becomes new resistance. So basically, I can set this as my what key resistance level or zone. So we all know that in terms of market structure perspective. Why? Because this was once a support, got broken, becomes new resistance, and every time the market reacted at the zone, the price drops. Alright, so we know that is a key resistance level. So we can mark this as a key resistance. Alright, so how about our support? So definitely you should check the past historical data to know if this is a key significant level of support. Alright, alright. So we know this is our key support level or zone. So I'll mark this as my key support level or what? Or zone. Alright, so I can just adjust this. Alright, so this is my key support level or zone. Alright, again, this is a zone, not a specific line or something. This is a zone, right? So I can just change this color to a green one. Right, so I have now my key resistance level and key support level. Alright, and since we're dealing with 50%, since we're dealing with 50% rule, so again guys, prior to doing entries and going down to a much lower time frame, I will now mark my 50% what 50% if ever, yeah, level. So this is my 50% level at this current market structure. So using just our Fibonacci tool, right, we can simply know our 50% key level. All right, so even here I can adjust at this level. All right, peak to peak. All right, week to week. So But basically, since we're dealing with I estimate only, alright, I can simply omit this tool, or just to show you that we have this 50% reaction at this level. Alright, so we all know that, right? Okay, so this is our 50% level. So how can you find opportunities at this point? So again, I will now go to a much lower time to scalp this market, right? Alright, so what are the steps? So the first step, of course, we already marked our key zones. So I'll just change this color 50% level to blue. Alright, so we have now marked our zones for support, resistance, and our 50% level. So basically, what we can do is, if we ever we want to find an opportunity, basically you have to know where you are at the current zones that are marked. So let's say we want to buy this market. So how can you find opportunities at this market? So basically you have to look for what? A consolidation, right? And you have to wait for the break of this consolidation. So let's say you have this consolidation. So you have to draw what? Draw a box every time. And after that, you have to use your 50% tool or your Fibonacci tool to mark your 50% level at this consolidation. So this is my 50%. Alright, we all know that. And even if you don't have this tool, you can just what? I estimate your 50%. Right? So basically this is your 50% level. So the rule is, first, if you want to buy, if you are at the support level, you have to buy this market. You can have a buy opportunity at this market. But before that, you have to draw a square or mark your consolidation market, and then split that in half or use any tool to locate your 50% level at this consolidation. So basically, this is my 50% level. So if I want to buy this market, I want to buy only at this what? Within this 50% level. Right? Not what? Not passing beyond this 50% level. So again, if I want to buy this market, I will set what? A buy limit, or I would wait for the market to return to my 50% level. Again, this is my 50%. This blue line. Right? This is my 50% level for entries. Alright? So I will just keep an eye on this 50%. Right? Alright, should keep an eye on this 50% and looking for candlestick confirmations for a buy opportunity. So basically, I have to what? I have to wait for the market to react to this 50%, or at least within this 50% or less within this range. Alright? So this is my trading opportunity or high probability trade zone. This 50%, alright? So we're dealing with 50% level. So this is my HPT. If the market price goes through beyond this 50%, definitely I will not eye for a buy opportunity. Alright, so what did the price do or did? We can see here that the market price reacted at this 50% and formed what? Buying pressure candles. So basically, I can look for an opportunity or place a trade at this level, because we all know that the current price is at the support level at my H1 time frame. Then after that, I look for a box or a consolidation and I wait for that break. Once the price broke this box, definitely I will eye for the 50% of that box to place an entry. So basically, I will have to place an entry at the 50% level, considering there is a buying pressure candle. So, right, if we analyze this market, right, if we analyze this market, we can see what? We can see here a lot of buying pressure candles. So, once I saw this pin bar, alright, I can place my entry here right after the next candle, or basically here, and then stop loss just below structure, and my TP is the next level, or the 50% of my overall zones at the H1 time frame where I mark my key levels, right? So that will be my trade for that specific opportunity. All right, so the point is, if the market broke beyond your 50% level, definitely you're not eyeing for a buy opportunity anymore. So the momentum still, if your candlestick formation for buying pressure is still within the 50% and not uh, go through or beyond the 50%, definitely you still have the opportunity to buy this market. But if the price broke through this 50% and showed a lot of selling pressures, definitely you will now have to abandon the trade opportunity and look for another entry, or look for another opportunity at the currency pair or next currency pair. So basically, if we found an opportunity of the 50%, so the rule is we have to find a consolidation market first at our support level if you want to buy. Then wait for that break, and then basically the market should react to the 50% level, or at least within the 50% of your entry. All right. So, or your HPT zone. So HPT is now from 50% and less. So 0 to 50% is your trading opportunity at this box. All right. So once I saw this bullish pressure or bullish buying pressure candles, then I can set my trade now for a buy, and then take profit would be the next zone for the 50% at the H1. Right. So it's just cutting your consolidation mark into half, and then that will be your decision point whether you can buy or not this. You can buy or not buy this market. So basically, you have to know if the price goes through or beyond this 50%. Definitely, uh, reject that opportunity for a buy. So definitely, the market will now push down since it broke through your 50%. All right. So how about for a sell opportunity? How about for a sell opportunity? For a sell opportunity, basically, you have to what? You have to be at the resistance zone. Alright, so since we already have taken profit at this level, alright, so you have to what? Let's say, for example, you have to find a consolidation at your resistance level or zone. So if I can find an opportunity at the resistance level, let's say here, right? What we can see here is a consolidation. So we wait for the market structure break of this consolidation. We draw a box, right? We draw a box, and then if we use our Fibonacci tool for the 50%, right? 50% is over here. So we mark our 50%, bam, remove our Fibonacci tool. Even if you don't have the Fibonacci tool, you can just estimate, or I estimate this box. And then you know that your HPT will be from this 50% and below market structure level. Alright, this is my HPT for a sell opportunity. Right? If the market broke through this 50%, so I will keep an eye on this level. If the market broke through this 50% level or HPT zone, definitely I will not eye for a sell opportunity anymore, because I know the market will eventually what? Go up. Right? So what do we have here? This is our HPT. All right. The price showed. Is there any selling pressure candle or any candlestick formation that will give us a decision to sell this market or short this market? Let's see. All right. Is there any? So at this point, we saw what? A selling what? A selling pressure candle. Where is that? Here. And then after that, the market formed what? An engulfing candle. This strong surge over here. So we can say that there is a selling pressure at our or within our 50% level. So if I'm going to take this trade, all right, once I saw this, even this bearish engulfing candle as a sign that the market will push down, this bearish engulfing, this is a candlestick formation, all right, or the selling pressure candle, I can place my trade as a short after this next candle, right, and then a web structure for the stop loss. Where is my TP? My TP would be at the next level or zone, right over here, right? So we all know that in an H1 time frame, right? In an H1 time frame, we have our three levels: our middle, our 50%, our support, and our resistance. So that is how we play the market within a range. All right, we just utilize the consolidation and cut that in half for our optimal entry. So when I'm at the resistance level or zone, definitely I will eye for what? I will eye for a selling opportunity. But before that, I will have to look for a consolidation. So once the market broke through this box, this level, meaning I can eye my entry at the 50% of that box. So that is my HPT or high probability trade zone. That 50%. If the market goes through beyond 50%, I will definitely ignore this market and look for another opportunity or look for another pair for me to trade. All right. So the 50% is over here. The market showed a selling pressure confirmation. That definitely will provide me a decision to trade or enter the trade at this market. All right. So again, your take profit is at the higher level, higher structure, higher time frame for your take profit on an H1 level. Again, we're entering at the 5 minutes time frame and TP at our H1 time frame. So the market consolidate initially and then what? Right? We got stop out probably at this point, but if we have monitored this chart, definitely we have to exit the trade over here. All right, so that is how you utilize this scalping strategy. So basically, since we're only dealing with scalping, our entries would be in and out of the market. So we have to know where we at the current picture or at the current market structure at the higher time frame. All right. So that basically it is how you apply the 50% level. So again, if you want to buy this market, look for a consolidation market. All right. So all you have to do is know where you are at the current picture. If you are at the support or if you are at the resistance, definitely when you are at support, you buy the market. When you are at resistance, you sell the market. All right. So the point is, all right. Example at this consolidation, we have a consolidation again here. All right, we have a consolidation. All right, we all know that. So I will just cut this in half for my entry. Okay, I estimate this. All right. And then I know that my current opportunity at is at this level. All right, at this level, at this 50% HPT. All right, meaning I should keep an eye on this 50% zone If the market passed beyond this 50%, definitely I will not buy this market. Alright. But the market showed me a what? A buying pressure candle, or even let's see what the market did. Alright. So yeah. Once the market broke structure at this box, right? This consolidation box, right? This is a break. Then I have to wait for the market to return at this 50% level, or at least this zone, or our HPT, and show us a candlestick formation for a buying pressure candle, right? So this is a buying pressure candle over here, right? So if I would take the trade, the trade would be right here. Or if you are very conservative or very cautious, just below structure, and then your TP would be at the next what? Higher time frame structure at your resistance. Alright. So that is how you scalp the market using just basic what? 50% rule entry, finding a consolidation, cut that in half, and look for the opportunity. If you're going to buy or sell, if you're going to buy, 50% is your limit, meaning you shouldn't pass through that 50%. If you're going to sell, again, you shouldn't pass through again beyond that 50% level, right? So that is how you find opportunities using this basic 50% rule, all right? Because the moment it go through or pass through beyond this 50%, definitely the market will be going down or bearish, turn into bearish market. Why? Because the momentum of a market normally will hold at the 50%, and it will only show you how strong the market is if it will hold at the 50%. So that basically is our what? Our decision point wherein we can buy, or are we going to buy this market, or are we going to sell this market. So that is how I use this strategy to scalp the market. Just finding any consolidation market, cut that in half, and once the price broke through this box, then I know I can look for an opportunity once it retrace or do a correction at my HPT zone, or 50% level. Alright, so you can do back testing for this strategy. Just knowing where you're at the current picture, of course, you have to know your key levels at the higher time frame prior to doing entries at the lower time frame. Alright, so if you are very what? If you're very you want to make sure of your entries without entering blindly, again, you can just scalp this market and looking for again another consolidation and 50%, cutting that in half into 50%. So basically, if I go to a much lower time, like let's say for example 1 minute, I will have to look for a 50% level of this consolidation market. Let's say over here, right? Is a consolidation market, right? So I'll just cut this in half, and that will be my entry. So the price broke through this box, all right? So basically, my entry will be over here, right? So you see, there's a buying pressure candle showed, all right, over here, right? There's an engulfing candle. So if I want to buy this market, I could have caught this uh, long trade, right? Right? Again, you have to know your key level at the higher time frame. So basically, your next key level will be over here, or even here. So still, all right. The point is, you can still look for an entry at your 50% level. All right. So same thing here. There's a consolidation over here. All you have to do is find consolidation market and cut that in half if it broke structure. 50%, bam. All right. So I don't have to use Fibonacci tool at this point because I can already see the 50% at this box. So when the market broke through this box, alright, broke through this box, so definitely I can look for an opportunity as a sell, alright, at this market. So I saw here what? A selling pressure candle. So that basically is my sign for me to sell this market. So again, I could have entered at this point right after that bearish pin bar, structure above structure for the stop loss, and take profit would be the next key significant level or zone. All right. So you just have to find consolidation and cut it in half. So that basically will be your entry, as long as there's a candlestick formation for a buying or selling pressure. So I use this strategy just to scalp the market, looking for what? Consolidation, and knowing that if the price broke through my 50% level, definitely I will abandon that trade opportunity and look for another opportunity uh for a trade. All right. So that is it for today's video. I hope you have learned something at this simple yet, I must say, effective strategy when it comes to scalping the market. All you have to do is find your zones first, mark your key levels, go down to a lower time frame, look for consolidation, break that in half. That will be your entry. That will be your trade opportunity for a high probability trade. Alright? If it passes or go beyond the 50%, ignore the trade and look for another opportunity. As simple as that. You don't have to complicate things. And again, this is just a beginner strategy on how you can use variety of logic and use variety of strategies into your trading. But nevertheless, all you have to do is stick to your trading plan, always have a proper risk management, and know that there's no 100% system in trading. All you have to do is be smart, manage your risk well, and how do you call this? Uh, be patient when it comes to your entries. You have to know if there is any candlestick formation or candlestick formation for your decision making. All right. If there's no setup, definitely there's no trade. The advantage of if there's no trade, there should be there shouldn't be any possible losses because you're just sitting back, observing the price, and looking for better opportunities. All right. So that is it for today's video. I hope you have learned something. Again, guys, I will be teaching a lot for those beginners or aspiring traders on how to be better in their trades and just to have the feel on how the market really works and the overall market behavior. So again, trading for a living, education at its finest, and again, I'm only sharing you guys what I know will be beneficial for you. So I'm not saying this is perfect, but then again, if you can use that for your advantage, then use it. If it doesn't, it doesn't matter. As long as you have learned something from me, even for the short clip or video. So again, guys, thank you for all your support. To all my VIP students, to all my future supporters, again, go check a description below if you want to be my student, and hit that subscribe button so you are updated every time I posted a new video. So see you again next video, and thank you guys, and God bless.